Hey traders, welcome to Charts and Coffee. Happy Tuesday, everybody. We are embarking on yet another day of fairly what seems to be nonstop Fed speak. Yesterday we had all these members speaking, and you think, what more could they have to say? Well, clearly today, Tuesday, plenty more. So right now we've got Waller, Barkin at 9:05, Williams at 9:10, Bostic at 11:45, Barr. And then tonight, because I guess she needed some dinner plans, we've got Meester at 7 p.m. So heads up. We've got still a lot of FOMC speakers on tap. And that means that, when you look at the way in which yesterday responded, and I'm not saying it's the Fed speakers alone. However, the more uncertain we are as a trading and investing public about the direction of monetary policy, the more difficult it's going to be to punch up to those higher highs and have those higher lows. And the reason for that is much of the reason up till now, especially in Q1 and late Q4 of last year, was the certainty we had about cuts. If you've been watching Charts and Coffee for any period of time, you know the narrative around macroeconomic data, inflation, employment is what then justifies the Federal Reserve's actions and messaging around monetary policy. We are expecting cuts before we get hikes. How many is still up for grabs when we start? Seems to be September. Remember, this is now pushed back from a very aggressive March expectation to a slightly lukewarm May to now September. And that's why we see a lot more volatility. That's why we see a lot more difficulty punching up to those higher highs as opposed to what we saw in Q1. Could it be that simple, Rog? Could it just be as simple as the Fed's going to cut rates and you buy stocks? Look, I don't care what anybody says. I've been watching this stuff for 30 years. I know many of you have been watching it for decades too. The simple answer is yes. Don't overcomplicate. Equities love cheap money. Evidence of cheap money, evidence of lower rates to come can be seen in places other than the indices. The bond market, the long bond, the 10-year, keep an eye on those. We want to continue to see green candles in both the 10 and the 30. It'd be ideal to see them above the 200 on both of those. We're not there yet. And the other symbol to keep an eye on is the euro. We want to continue to see euro moving higher, which means the US dollar is moving lower. Now, it's not exactly tumbling or anything, but we want to see much more organized strength to the upside because a country who has proximity, in other words, they're embarking on or are about to very soon embark on rate cuts, the currency of that country should weaken. I don't mean that as a bad thing. And we usually think weak is bad and strong is good. I mean, it's not that simple when it comes to currencies. So what we want to see is the euro moving higher, which reflects the US dollar moving lower. And when we see that kind of price action, that means that the US dollar is now convinced that the Federal Reserve is going to cut as well. All right, so that is what we've got here. That's what the calendar looks like. Yeah, it's a wonky one this week. Tomorrow, by the way, we get the FOMC meeting minutes. That's that and the University of Michigan inflation expectations could be considered the two most impactful data releases for and I don't even know that I'd consider the FOMC a data release, but it is a singular event that lets us see the minutes. But those are going to be the two most important events in terms of just dumping something on the market for us to process. The rest of it's going to be FOM speakers. All right. That being said, let's get to it. We have first question here, and good morning to our Simpler Essentials room. All right. Good morning. Good morning. Question on Baidu. Sure. Now, Baidu is part of K-Web. So if we think about the different sectors that, or ETFs, a particular symbol is in. Here, I'll tell you this, gang. One of the first things that I remember noting about financial media or financial Twitter, right? Whatever we want to call that thing now, was these interesting arguments that would happen when two traders were talking about a symbol, but clearly one trader was talking about a short-term time frame and another was talking about a long-term. So I want to make sure that when we talk about symbols together, right, what's the information pertinent to a question. The symbol alone? Not really, right? What do we want to do with it? Long or short, long calls, long puts, buy the shares, buy options. What's our time horizon, right? Am I looking at this for the next few months, few years? Is this for the next few days or few weeks? All these are relevant to, how we want to look at an individual symbol through the different ways that we can do something with it. So looking at Baidu, again, I'm just going to go with the daily until it gets above the 200. It's sitting in a place where it's more likely to be heavy than not. It really should get above the 200 to invite more traders to be buying the shares or be buying calls. So if you're looking at the hourly, right? Now, thank you, Christine B, for the question. So notice Christine said, hey, I'm looking at the hourly time frame. So that tells me a lot. So Kristen B is looking at probably a few days, maybe just today, right? And I know to look at the structure here. If there's anything that I'm looking at on Baidu right now, it's actually quite weak. It's actually quite weak. So if you've got June expiration calls, what I would say you're really looking for in the next handful of weeks is, number one, the 1 hour chart to lose its trend down and for the daily to get above the 200. But I'll say this, it's only May 21. If I'm looking at an hourly time frame, so let's talk about time frame and time horizon. If I'm looking at an hourly time frame, my typical time frame is going to be, or time horizon is going to be just a handful of days, not a couple of weeks. All right. So Christine B, if I'm looking at having options that expire in June, that's a daily time frame confirmation. Or, that's really where you want that setup to be. That would really be a daily chart, because I'm not going to expect an hourly time frame to carry me for that many weeks. So I would say, if anything, you need to see the price above the 200, and then think about the time frame versus time horizon in terms of that expectancy. All right, next up, XLF daily. All right, so this was an interesting day, BC. In XLF, yesterday there was a investor day. I think one of our members in the Sector Secrets Mastery, shout out to you, Bruce, mentioned that there was a investor day in JP Morgan. And that immediately gets me thinking, there's an event, who knows what's going to be said, and there's likely to be a lot of volatility. So despite any kind of interest that I had in JP Morgan, which I do, I don't want to step out in front of a candle of unusual size on a day that it's most likely to have one. And that's exactly what JP Morgan did. Now, what does that mean to XLF? Remember, JP Morgan is the number 2 weighted stock within the financial sector. So yeah, it has the ability to drag not only financials lower, itself lower, it has the ability to drag the likes of Bank of America, Wells Fargo, Citi, etc., lower as well. I would say if I'm looking at XLF and I want to minimize the impact of JP Morgan on my life right now, which would be smart, stepping out yesterday in front of that sinking stock is a very difficult trade. What I would say is, let's use that and maybe look at something like Bank of America, more specific to an individual stock that is a relative outperformer. Would I look for potential strength in JP Morgan? Eventually, but Bank of America might be the better way to take advantage of it. So keep an eye on XLF, keep an eye on stocks that are not JP Morgan, and maybe something like Citi could be interesting. BAC could be interesting. Wells, gosh, yeah, Wells could be far more interesting. So when you've got an event, right, a lot of traders don't keep an eye on the calendar, or once a candle of unusual size establishes itself, that is not the time. And what is a candle of unusual size? Yes, that is an absolute reference to The Princess Bride, rodents of unusual size. What happens when a single candle is about 1.5 to 2 times larger than the candles that immediately preceded it? You've got something different going on, and that should definitely get your attention. So I like the XLF, but I think I like those individual names with an XLF as a way to sort of trade around or minimize the impact of JP Morgan a little bit better. All right. Ethereum. I have not had my, look, I know everyone's talking about crypto right now, and crypto is usually all the rage once it's made a move. Ethereum shot straight up, as you can see here yesterday. I've got no interest in something that's already shot straight up. Nothing wrong with it, Paul, but look, here's the thing, and this is sort of where I stand on any of these things, and the way that I would love folks to look at these things. If we're interested in crypto, we should always be looking at crypto, right? Now, I say this as someone who's been involved in crypto since 2016 with a 3-digit cost basis on Bitcoin, right? Because, and I don't say that, it's not an impressive thing. It's a thing that reflects the fact that once there's a narrative on my watch list, I continue to watch it for a setup. Most traders, and again, I don't think anyone watching me is that trader, but let me tell you what most traders do. Most traders turn on the television, all right? Most traders will wait for a big move or wait for something to be mentioned on TV. Remember, these folks on TV, the commentators, that's their job. I'm not listening to an ESPN analyst to become a better golfer. Are you? I know I'm not. We should not be listening to some analyst on television to become better traders and investors. It's the same thing. It's the same model, right? Let's talk about the sport. Our sport just happens to be trading. So remember, when something happens, when there's a highlight reel, that's what gets put on television. So if we're looking at Ethereum day in and day out, I know a lot of you are going to say, Rog, it tested the 200. I know those were red candles, but it tested the 200 a number of times. Wouldn't that have been a better spot to look? Absolutely. We could say the same thing about BITO or any of these. So the way I look at these, for me, this is my 2 cents. This could go up to 37. If it will, it's going to do it without me. The way that I think about entries is at what level can I control risk? And in the case of a buy, what level do I have support? After a move like this, there's nothing for me to do. And it's not just limited to crypto. It's limited to anything that when we wake up in the morning, it's having a really big up candle. Of course, everyone's going to talk about it. But does that mean that's where the setup was? So in my mind, if crypto is something you're looking at, it's something you look at every day or every week, waiting for, or you place an alert and you're waiting for that opportunity to buy it. At this point, actually, I have zero sympathy. This is what I want everyone to look at, right? At this point, zero sympathy. Some chucklehead tweets, even dumber chuckleheads follow the tweet in. How many folks are long from 65? At this point, no sympathy. This is basically an obscene microcosm of anything that just launches. And, remember that scene in Jurassic Park where they said, don't move? The T-Rex was kind of coming into the picture. The kids were in the car and someone was telling the kids, don't move. The T-Rex can't see you if you move. I think most traders are little T-Rex traders running around with their short little arms, and they see something twitching. Oh my gosh, we got to trade that. Don't be a T-Rex trader, right? But I know no one watching me is. Let's wait for some kind of reason for a setup, and let's avoid knucklehead things like this. I can't even believe that in 2024, this is still stuff that retail traders do. Mind-boggling. But right, this is the market out to get you. The market's not out to get you. It just seizes on stupidity, right? I'd rather blame myself and say, Rob, did you do something dumb? Rather than, the market's out to get me. It really isn't. It really isn't. I promise you. Half the time, it doesn't even know we're there. So if we're looking at, ECB, I haven't really been tracking what Lagarde has been saying. I probably need to. I probably need to start looking at the ECB a little bit more, because if the ECB starts sounding dovish, right? If the ECB starts sounding dovish, then you're right. What we'll have are 2 competitive G7 central banks that are weakening the currency, and that will limit how weak the dollar can get. But for right now, we are seeing the euro gaining on the dollar, and that's dollar weakness. All right. Next up is VIX and VIX expiration. Rainy days, is that what you're asking me? So VIX continues to be below 13, which is pretty low, but that's not going to hurt necessarily follow through. We've seen follow through when VIX is below 13 before. I don't want to see it much lower than it is. Clearly, a lower VIX is a better problem. It's a better class of problem to have than a higher VIX. VIX above 15, above 16 is chaos. VIX below that level, we should still be able to see some decent follow through. Now, really low volatility is not super helpful, but it's a whole lot easier to trade and put in risk management than when it's trading above, again, it's range high. Now, please, I get people saying all the time, well, 16 on the VIX isn't high. That's not the point. And this is where a lot of traders don't understand how the VIX works. The VIX is going to find a range, right? It could be the range, if you're looking at the range from 2020 or 2019 or 22, that doesn't matter. That was the range then. Find the range now. And the range that we've been seeing since late last year was just above 12 and just below 16. So that's our measuring stick now, right? That's our measuring stick now. When we get above 16, and you can see what happened in April, it was chaos. We got back down below 16. Oh, magically, the volatility contracted. We started to follow through a little bit better again. And that's what May has been. May's been a great trading month again. And that has to do a lot with the VIX sinking down into its normal range, which has basically been between 12 and 16, 12 and 15 and a half, that area. I don't want to see it much, much lower. But as far as NVIDIA, hey, rainy days, I'll tell you straight up, who cares? Really, here's where it really just does shock me. So everyone wants to go line up at their local 7-Eleven and buy scratch-off lottery tickets. We'll just guess it. We're going to scratch off those lottery tickets and guess at which way NVIDIA is going. NVIDIA is important because it's very heavily weighted in semiconductors, right? But what I find very interesting, and most of the commentary out there is, what's NVIDIA going to do? I'll be honest with you. I couldn't give a rip. What I do care about is if NVIDIA has volatility to the downside, that might be useful. For as much as everyone's talking about NVIDIA, how about talking about something that's actually moving higher and to higher highs, like Qualcomm? This was a trade that we put on in the Sector Secrets Mastery. These were options that we bought for $3.95 that went for some of our traders to over $16. This is a trade, right? I mean, really, again, this is what I mean about who cares about stocks that are not in trends. They're chopping around. Maybe they were good to us in Q1, but we just can't let it go, right? And that keeps us from getting into other stocks that are in that same sector, like Qualcomm, right? So what you trade is more important than how you trade it. And if you can start finding the Qualcomms of the world and let go of just the cocktail chatter about NVIDIA. Now, NVIDIA is important because of its weighting. But am I going to venture into guessing which way it goes? No. I want to use that volatility. So I don't play earnings. I actually hate earnings season. It's volatility that's unnecessary. It's messy. It's created an environment where it's I remember Buffett talking about earnings a few years ago, and Buffett can say these things, right? And he pretty much said, yeah, it's a mess. Every quarter, there's an over-exaggerated response to whether or not a company has done well in the previous 90 days. It really has been much more toxic than people really want to wrap their heads around, but that's a different conversation. What I'll say is, let's take a look at where the trends are. And if a high concentration weighted stock like NVIDIA has earnings, respect what it's going to do to the SMH, respect what it has the ability to do, the XLK, and of course, the NASDAQ itself. But after that, make sure you're not too focused on that one name and missing out on trades like Qualcomm that have far outperformed NVIDIA. Do you see how there's an opportunity cost here? If I'm obsessed about the nonstop nonsense about NVIDIA, I'm missing things like a 4x trade, a 400% move, buying something at $4 and getting out at 16, right, in Qualcomm. And there's an opportunity cost to staying fixated on certain types of things that may not be necessarily where the trade is at. And that's where it absolutely kills me, because our job is to find the things that'll follow through, right? And it's not always going to be in the names that everyone's talking about. In fact, sometimes what we're talking about are things that have already happened, or wishing for the bygone days where NVIDIA was absolutely in fuego. NVIDIA was a beautiful stock in Q1, right? It needs some Dramamine in Q2. Thank you for the question, Rainy Days. All right. Next is, actually, I got to wrap it up. Salty Raghee in the house, says Lorna Bot. Yeah, maybe. I've had a headache for 2 days. That might be it too. But, I'll tell you, this is what I hope everyone takes away from the conversation. Don't worry about what indicator to use. Don't worry about what strategy to use. Ask yourself, do I have the skill set to look at 100 charts, maybe 50 charts, and have a process by which I understand which is most likely to follow through, which is most likely, like Qualcomm versus NVIDIA, to keep moving higher. If you have that process, and that's what we teach in their Sector Secrets Mastery, if you have that process, then regardless of what you do, right, you've gotten to the best symbols that could move in your direction. And then at that point, whether you write premium, whether you buy premium, whether you leg into trades and use verticals, whether you just like to be long calls or long puts like myself, almost everything will work. Directional bias is everything. All right, gang, be good to each other. I'll see you tomorrow, same time, same station.